Alright, welcome back to another session of the weekly forecast. It's going to be for the third week of February 17 to 21. We are starting the week off with a bank holiday and then followed by FOMC meeting minutes on Wednesday, and then high impact news on Thursday 8:30 and 9:45 Friday. So starting off from the monthly time frame, right, we are pretty clear right now that we are heading for all-time highs for both Nasdaq and ES, Dow Jones maybe, right? Moving down lower into the weekly time frame, next week's objective is the same, all-time highs, basically previous year's high, okay? And then moving down into the daily time frame, we have a bullish fair value gap on Monday. Created on Friday. So this fair value gap right here, price can utilize this fair value gap to go higher. This is the basic easiest setup for the weekly candle so far that I have seen for the past few weeks, right? So we have the SMT lows to confirm the move, right? Right here for NQ versus ES. So right now we can trust that the move is going to deliver. All right. How far into all-time highs? I'm not too sure, but if you would like to measure using the fibs, you can use this impulse here and then do like a 0.5 standard deviation or 1 standard deviation. All right. So how do I intend to trade above all-time highs? It's very simple. Basically every single day just look for power of 3 bullish candles. there's nothing else to do, right? Because there's nothing on the left that you can reference. So every day you're just thinking that the price is going to go higher until the end of the week, whereby you would have a slight retracement. So maybe on Thursday or Friday then you would trade the TGIF, and just like that, and then the following weeks just target the previous week's highs and lows. That's it. That's all it is. It's very simple, and it doesn't have to be very difficult or complicated, basically, right? You're basically only using the last week's price action or the previous day's price action to look for liquidities, because there's absolutely nothing on the left for price to want to reference, and it can go as high as it wants, right? There is no limit. There is no bearish order block, there's no bearish fair value gap above the charts, right? So yeah, just trade it like that in the coming weeks, and I'm much interested to see how we trade above the all-time highs. Okay, because we are attacking the all-time highs at the beginning of the year, which means there's bound to be retracements in the coming months to come, definitely. And I would think that those retracements are going to be very big retracements. So on the lower time frames it might seem like a reversal. Okay, so if we take a look at the monthly time frame, monthly, or basically I think let's make it simple, the 12 months time frame. Okay, this is every candle represents an entire year, right? So initially we manipulated lower in January, and then right now we are trading higher into the highs. Every single time price takes out a higher time frame liquidity, you would be expecting retracements, correct? However, if we take a look at this particular candle right here, it did not retrace at all. I mean, in the middle of the candle, yes, you would see retracements, but we still end up closing the candle like this, even though we attacked the all-time highs, which is external liquidity, and it was like a one-way thing. So if we look at the weekly chart, So the previous all-time highs was over here for NQ and for ES, somewhere around here. Okay, so we took out the highs and we retraced. This is during April. And then we continued to go higher. So I'm expecting the same thing to happen this year. Okay, we're going to take out the highs and then we're going to form some sort of a range. And then we're going to retrace in April, eventually to go higher. Okay, that is how I'm thinking this year is going to be. Not guaranteed, because yearly candles in terms of profiles are hard to predict for now, because we are in all-time highs. So there's nothing that I can utilize on the charts. Okay, and that's basically it. So next week I'm bullish, looking for a weekly opening manipulation, which means manipulation below the weekly open. Best case scenario is that we get the manipulation on Tuesday/Wednesday. That would be the best. And best case scenario would be that it's below the weekly open. So I'm expecting the week to open near the highs, and then maybe we take out last week's high and then we retrace. That is okay, that is totally fine. And then retracing into Friday's low, hopefully below the weekly open as well. Then it would be a very nice trade to hold if you're a swing trader, because you'll be buying below the weekly open. But for me, it's easy, right? You just buy below the daily open for Tuesday or Wednesday to look for an expansion into the week, right? So yeah, that's basically it. Nothing much to comment here. And I'm glad that we are finally breaking out of this accumulation, even though it wasn't the hardest to trade, but it's just we're lucky that it provided quite a large range, right? So because manipulations are often small ranges, but we are lucky enough that this time around it's a really large range manipulation. You can still trade intraday with this type of range, right? It's like a 2,000 point range from here to here. Yeah, close enough. So I think that's pretty much it for this session. Nothing else to add on. And yeah, thanks for watching, and good luck trading next week. I'll see you again.